All right, good morning. My name is Don Dale. This morning market. Please, if can hear me clearly, just type a yes. Chat box. Just signify by typing a yes. All right, thank you. So we'll start off our analysis morning by looking at the fundamentals. It's always very important that we consider or look at fundamentals for the day. We'll be starting off by going to our forest factory, then looking at the news that we have slated for today. So I'll be sharing my screen so you can see exactly what I'm looking. All right, so right now I'm on Forest Factory. This is forestfactory.com. Now I'm looking at the news events that we have for today. So you notice that we don't have so much news for today. Is 10th of May 2020. We have a news on now, which was released by 7 a.m. That was actually on unemployment rates, employment counts change, and employment change. Now, the news was positive for the pound. And then by 1:30 today, we have the PPI, United States. Now, the PPI, news events. So someone is saying my voice is echoing. Is it okay now? Please, can you confirm if my voice is okay now? So we have the PPI, major news events, and that is slated for 1:30. Now, this is one of the indicators that the Fed, that is the Federal Reserve, keep close watch. Because from this, they could tell the rate at which the inflation will move, direction the inflation. So it is a very, very important news. Now, also take note that by 3 p.m., okay, we have Fed, the Powell speech. So these are volatile events, especially the speech. So the speech will be closely watched and monitored. And for that reason, we should expect volatility on the dollar day. All right. So with that being said, we can now take note that when we do fundamental analysis, it's usually very difficult to ascertain for where the market will go based on these events. But we can do a calculated guess to know the probable direction the market will move, especially that particular currency we are looking at. And that is going to be in line with the technicals. Most of the times, you will notice that these kind of events are catalysts to movement in the market. Market will move, prices will move based on these events. For instance, if you look at yesterday morning, we had a high impact event and saw how the market was slowing. We always want these high impact to be available so that the market or the prices can move. And most of the times you will observe that they play out technically. They cause the market to play out technically. So what the market is reluctant to do technically, fundamentals will cause or push the market to do that. It has been reluctant to do. So sometimes it's possible to pass the possible direction of fundamentals if your technicals are good. That is one thing that you find. Also have in mind that dollar today will be very volatile. Let's now go to technical aspects of analysis. Now, usually it's best to start with dollar index. So I will start off with X, and then we'll analysis on the dollar index. I have an overview where the dollar is currently, expect today. All right, so let me share my screen. All right, so I'm looking at the dollar index. So I will start off the analysis by looking at the D1. That my chart is on D1. All I'm interested in doing, looking at the overall movement that has taken place in the dollar, and see closely that for a couple of weeks, been ending up, but of recently, that is from the beginning of this month of dollar index has been in range, ranging. So if you look at the index, you notice that we've been ranging for a couple of days. The range I am referring to. All right, so we've been in a range for a couple of days now. So that's because we haven't had any serious news events on the dollar. So this week is when we have such a movement on the dollar. All right, so having been in a range, take note that we've just left after the last month's massive movement. We retraced. Usually what I want to do is to measure the extent of the retracement. So if I pick the low, you can see this movement here, this all the way to the high, last month's range, that have actually retraced as expected. You can see the retracement at this point. Retraced from our 1.5% of the Fibonacci. What I have just done is to draw from last month's low price all the way to last month's high price. There's been a retracement. So whenever there's a retracement, there's always an expansion that will follow. So there's a tendency for us to be expecting an expansion, that is a new upside. Very possible. So now let me drop down to 4 so that because all right, so this is our H4. So on the H4 timetable, you can see on the H4 time frame, you can see that even though we have retraced what we see here, the market has actually broken structure downside. What that means is that the market has created a high, this point, this level up here, and then we are now having two high that's less than the previous high. So we now have another high over here. This is a confirmation that the uptrend, which was last likely getting exhausted. There's a tendency that we might continue a further or a deeper retracement on the dollar index. Week, this is where we are. This market has been ranging mostly. So on the D1, I mean H1 rather, you can see the massive range. There not really been any clear direction dollar index. That is the obvious. I haven't seen any clear direction on the dollar index because it is this week that we will now begin to experience movement of clear direction. Because this week alone, we have the PPI, have the inflation rates, we have CPI, and then we have some other major news. We have retail sales, all on the United States dollar this week. From this week, now begin to see a clear direction. But for now, the index is really not giving us any clear sign. Because of it has been in the range for what I should expect or what I want to see a possible push up. Yes, so I will want to see the dollar move all the way up to around this region. I want to see it move all the way up to around this region. Take note that this is what many persons will refer to as support and resistance. So this is support and resistance. This was a former resistance, former support that has turned resistance. So most likely the dollar shock into this or drop in price. I'm saying something like this. And very, very possible. Remember why I am bullish, bearish on the dollar. Structurally, we are seeing a break of market structure. Market has failed to hit new high upside. We have highs that are getting lower a day. Even when we see movement to the upside, highs have failed to break above the high. So tendency for the index to continue lower at this some point. So at this stage, let's now switch over to USD and see what we have in store on. All right, so if on the index we are not seeing much direction, then there's a tendency that on Euro USD also experience the same thing. So on the Euro index, on the Euro dollar rather, we notice that we've been in an uptrend for a while. If I draw my trend line, that's from the beginning of April, around April 11, notice that we've been in a steady uptrend. Even though there have been a lot of retracements up and down, but I can see that the market overall is an uptrend. Yes, that's on the. So what that simply means is that there's a tendency for us to go higher. So for today, we are looking at, let me zoom this in. So we are looking at a possible movement to the downside. So I will be bullish on Euro USD. I will be bullish on the dollar, on Euro USD, but I would want to see a further retracement, kind of. So I want to see the Euro USD retrace to around this area. So if I see a retracement to around this area, then I would want to buy from it. I'll be much more comfortable buying from region. So I can see retracement to this point, and that will give me more reasons to buy. Remember, like I said on the dollar index, we are not seeing any much clear direction because of there haven't been any high impact news on the dollar. We should begin to see such news. So this is what I'm expecting on Euro USD. I want to see the $2 retrace down to around this area for a up. Now, and then I will be expecting it to run above this particular high. So you can see this high over here. I want to see it run above this high. So remember, it has come there the first time, tested it as a support. If you face this particular region, so you see that we have tested that region before over here. Market go through that same level, that's a support, turn resistance again at this turn resistance. So I expect a retracement and then a push above this particular high. What I would want to do is I would want to buy from down here. So on the H1, how it look like. So I want to see the market drop down to around this region. Now, for those of us that may not want to wait till or may not have the patience, remember that trading is all about patience. You have to learn to be patient. Sometimes your analysis will take some time to play out. Yes. For those of us that might want to take the trades, then sometimes persons will be wondering, so why, if we are short, go down there, why don't we sell and then later buy? Yes, you can actually sell to that bottom and buy, but take it, have it at the back of your mind that because of the news that's scheduled for today, you may not see any movement on the Euro USD till that's 130. So if you're entering any trade right now on Euro USD, don't expect to see any movement. You may not see any movement. The market will just range till that time. So you can see it's already doing that. So if I switch down to M50, you can see that the market is ranging. So you won't see any movement for today until that news, time of that news. Market will just range until that news, because that news is very important news as to determining whether Fed would still reconsider their stance as to interest rate cut or increase. Although there is no increase on the table, but the time of the cutting of the interest rate is what is on the table. Whether they should cut it earlier or later next year, or earlier next year, earlier this year or next year. So a very crucial information, and the Fed has mentioned that they need more data to be able to decide whether interest rates should be held longer or it should be gained. Today's news is very, very key, very, very important. And have to take note that until that news comes out, you may not see any movement. So it is of no need for buying or selling where we are. There's no point buying or selling where we are. You won't see any movement. This market will just range unwanted. So the best option would be for us to either place a pending order down here, a buy, or wait for the market to drop, and then buy. So what I would want to do is, for those of us that want to enter in on this, can decide to place a buy limit. Let me look for where we can buy limit. Now, this buy limit is with the hopes that the news comes out, push the instrument down, then we hope that the market will place from that point onward. So you can place a buy limit at, my price is 1.0770. Buy limit at 1.0770. Just like I said, don't have any need for us to go in for an instant order because the market will just reach. You can place a buy limit at 1.0770. Sorry, I'm trying to bring out understanding. All right, so and then so I said buy entry at 1.07. Take a buy limit that point, and then our stop loss would be at so I'll be placing a stop loss at 1.07600. So 1.0700. Let me buy limits. Then my stop loss will be at 1.07600. And then my target TP be at 1.0800. So the TP is at 1.0800. Then the stop loss is at 1.0700. So that is the because of the high impact, the best for us to spend in order and wait for some of that. Sometimes too, can wait for the market to show you, and sometimes the market can show you where it wants to go. And so what I mean by that is market will be in the news and then can then catch on the retracement that will ensue, depending on if the news is positive sometimes you will notice that the news is positive, but the market will first of all retrace, that is the top, and then begin to rise. So you just pay attention to the data, turns out to be positive, then just know that you are buying the dollar, which is selling Euro USD. And if the data turns out to be negative, then you are buying Euro dollar. And in that case, want to catch up with the movement. So if the news is positive, you might see a spike down for a move up for the news. So you will most likely see the market will spike down and then go back up. If you spike down and the news turns out to be positive, then you should just buy Euro USD. All right, so let's now the same scenario, whatever happens on Euro USD is likely to also play out on Pound USD. So we're expecting to see the same thing on the Pound USD. All right, so let me just rush through the questions I have here. So someone is asking, what is the difference between the PPI and the CPI? Yes, there's a lot of differences. The PPI means Producers Price Index, and the CPI is Consumers Price Index. The difference is that for the Producers Price Index, it is tracking the prices of producers. They are those that produce, those that manufacture. Now, the cost or the rate at which they get raw material and production, the rate at which the prices of these materials or these raw materials are changing, what is being tracked by the PPI. Now, you know very well that if raw materials get expensive, then there's a tendency that producers will increase their costs. And if producers increase their costs, then the consumers will need to pay more for those products. The PPI is keeping track of the price of materials or raw materials by the producers, by the manufacturers, and all of that, whatever they are using for their. Now, the CPI, on the other hand, is keeping track of the cost of consumables, those goods that are used by households generally. Sometimes you will see the specification excluding automobile and stuff like that. So the CPI is keeping track of the changes in the prices of consumables or those goods that are used by households generally. That's the major difference. These two indices or these two indicators are used to measure the inflation rate or the inflation of a particular country. So that is the difference. So I've answered that. Then someone is asking, how do we know if the news is? Now, you will see that the news is positive by looking at your calendar. You go to your forex factory, and then once the news is positive, you will see the color of the numbers or the data going to be green. If it's negative, it's going to show red. I mean, if you go to your forex factory, let me show you an example. Now, please permit me to share my screen so that the person asking this question will have a clear understanding. So this is my screen. This is forexfactory.com. So for instance, this morning, the news on the British pound turned out to be positive. Now you can see the number here. That's actual. Actual is shown as green. So once the actual is green, means it's actually positive for the dollar, which means for the pound, in this instance, for the pound, which means you can buy the pound and then make very reasonable profit. Now, there are two ways you can use this information. One, you can capitalize on the instant volatility that will when this news is dropped, or you can trade later on. After the news is dropped, there's a tendency for that instrument to still maintain that momentum or continue in that positive state a lot of time. So if you cannot catch the move at the time of the news, then you can trade it and know that that instrument is positive. So you can buy the instrument along the way. So there are two ways. Either you are capitalizing on the instantaneous move that will occur when that news is dropped, or you build your analysis around the fact that the news on that instrument is positive, and so that instrument should have. All right, so that is in answer to the question, how do we know if it's going to be positive? All right, so let's look at another currency pair now. So we'll be looking at another instrument. This time around, I'll be going to. So please, can those of us in the audience, can you suggest instrument that you like us to? All right, so the next currency I want to look at will be USD JPY. So let me quickly share my screen so that you can see what I'm looking at. Do you have any instrument in mind that you would like us to quickly analysis on, then that will be fine. All right, so on USD JPY, you can see the trends. So let me starting off with the H4. So on the H4 time frame, you can see the movement to the upside. Now remember that this drop that you see here on the USD JPY was actually the BOJ's intervention. Sometimes back, I mentioned about this intervention on USD JPY that it's very likely to occur. So we've seen an intervention, which is now, and this further movement. Also, we notice that after this drop, which is this massive movement to the downside, the USD JPY has been trading with very low volatility. So you can see the size of the candles as the market is moving. They don't have volume. There are no real volume in the market because a lot of traders and investors are still afraid that there might be possible, continuation of this. What they are expecting is that maybe there might be another push because the target for the BOJ most of the times is make sure that the Japanese yen and the dollar don't trade above 150, 500. So they are always trying to push it 150, that is 150, 500, that is 155.00. So they always find ways to make sure that the market, that is USDJPY, do not trade above that price. So that's the reason why you see the low volatility in the USD JPY, because there's still fear that there's a possible an intervention can still occur again. And these interventions are very crazy. So trading USD JPY, any of the Chinese pairs, want to be very careful. So, but for where we are on the USD JPY, technically speaking, we should expect a kind of retracement because the market has gotten to a level where a possible retracement is, a retracement is possible. So if we are to enter on any trade at this point, I would rather consider a sell than a buy. Now, a very short-term sell, not a long-term sell. So from where we are currently, you can place a sell, suppose that market falls at least 50% of this move. So, but while you are selling USD JPY, you want to caution. Just like what I said, there may not be much in movement today because of the news that we are expecting. So you want to be very cautious as you trade USD JPY. I am anticipating that there might be a drop because the market has moved up to a region or an area where a retracement is very, very likely. So we are likely to experience a retracement from where we are. And then also notice that the move to the upside, this upside, is less volatile. Like the volume of trades is not massive. So very possible we might see a drop in the USD JPY. All right, so let me also check through the chat. All right, so someone is suggesting pound JPY and AUD JPY. Yes, so just as we see on USD JPY, we should also, experience a similar thing on pound JPY. But let's quickly look at pound JPY. All right, so this is pound JPY. So you notice that the same movement is happening on pound JPY. Now, the movement on pound JPY is usually much deeper and much more volatile than USD JPY. When there is a drop on pound JPY, it's massive, sometimes almost twice what you experience on USD JPY. So where we are currently, like I said earlier, there's a tendency for the market to at this particular point where we are, I will be expecting that this instrument will give us a form of retracement. Now we are at the point where some persons refer to as supply and demand. So we are almost at the supply zone. Take note of this massive drop. Where we are now is a supply zone. We expect that the market should give us a form of retracement supply zone. So we expect that the market should give us a form of the supply zone. Some can still call it resistance. We expect that the market should give us a form of retracement for a continuation to the upside. So if you are looking at pound JPY, then you should wait for the retracement to occur. Don't feel comfortable selling pound JPY, then just wait for a retracement to occur. It's very likely that today's news might push against the US dollar, very likely. So with that being said, then the retracement we are looking for might occur on the pound JPY. And then if that happens, I mean, the retracement might occur on the USD JPY. Then if that happens, then you can now position yourself for a long-term buy. So short term, I'm expecting pound JPY to sell. So I'm expecting a move to downside pound JPY short term. The long term, we're expecting a buy. From where we are on the pound JPY, I will be much more comfortable buying after I have seen a retracement to the downside. So the same thing will play out on the Euro JPY. Then I am also seeing all right, so someone is saying, can we start positioning our trade at this time in anticipation of the news? Just wait. That. All right, so there are two ways of doing it actually. It is possible you can position yourself right now. I will have to be honest with you. Personally, I position myself before the news. I will place my trade usually with a pending order before the news, but ensure that you have a stop loss in place. So you can do your technical analysis and then expect to catch the spike, ever spike and fall, and then wait for the news to drop. On the other hand, you can also decide to trade during the time of news. So there are actually two ways that it can be done. You can position yourself before the news. You can trade at the time of the news, and you can also decide to trade after the news. Because after the news, you now have all the information available to you to decide what next. For instance, let's say the news comes out of the dollar, then there's a massive move, and then the news is positive. Without positivity in the dollar, we expect that that will carry the day at least till next tomorrow, at least till the next high impact news. So if the news is positive on the dollar, you should expect appreciation of the dollar till the next news that we have. Likely going to be tomorrow. So you can decide to wait until the information is out, and then you jump in on the current trend that will be. Or you can position yourself before the news, but that will require a very high level of analysis. So you need to do very in-depth analysis to be able to position yourself before the news. And if you want to catch the recent move, the previous move that will up, then it means you'll be trading during the time of the news. But you notice that during the time of the news, most times because of the volume of trades that's orders or placing a trade might be a bit challenging because of the volume of orders. It's a general thing. So most of the times, it's much easier to even place a pending order before the news. That is in response to that particular question that was asked. Okay, so let's also look at USD JPY. I mean, someone suggested AUD rather. Let's quickly look at AUD USD. All right, so on AUD USD, in my opinion, I think we have a better chance of entering a trade on AUD USD than on Euro USD. So on AUD USD, there are more opportunities, like as you can see from the chart, of taking much more, in my opinion, much more than Euro USD. For the AUD USD, I would expect continuation to the upside. Take note that we are already forming, we are already in this trend, already in this uptrend, which is the continuation of the previous trend we have seen. So if you go back, you notice that for some days now, AUD USD has been in an uptrend. So you can categorize this trend as an uptrend. So there have been some deep retracements that are visible on the chart, been some deep retracement, but overall, notice that since from April, AUD USD has been appreciating in price. So we might most likely continue higher on AUD USD. And this year is giving us the best opportunity than Euro USD. Take note that sometimes in trading, the pairs you choose are very, very important. Yes, so that's why most times, for those persons that trade a particular instrument, sometimes you may not see a trade on that particular instrument. You don't have to force trade. You don't have to force trade. You're looking at a particular instrument and you are not seeing any particular thing to play. Then don't force it. Check other instruments, you might see something better, just like we have just seen. Euro on AUD USD, there's a possibility of a continuation. For AUD USD, I would want to sell, and I want to buy rather. Buy all the way up to this region. So, where we are currently, now take note that I'm looking at H1. My current time frame is H1. If I drop down to M15, notice that we've done really deep down, we've done a very massive. If I draw my feed from this low, that is yesterday, all the way to yesterday's high, and then extend my feed yesterday's low to yesterday. You notice we are at a region where we should be contemplating a buy. So we are already at this just at our 61.8, which means the instrument has retraced as it should. AUD USD has retraced as it should. So we should expect we can go in for a buy, targeting the next high, which is this high. We can buy from where we are on AUD USD, then we target this particular high. Now, because of the news that is slated for today, we still want to be very careful by entering particular trade. So if there's anybody who wants to pick a trade before the news time, then I will recommend AUD USD rather than Euro USD. And then your stop loss should be not too far. Your stop loss should be below today's low. So there's a low price that has already formed. Okay? Stop loss should be somewhere just below, and then can enter your trade. So for AUD USD, I can take an instant buy. So I'll take an instant buy on AUD USD. And then I will set my stop loss just below today's low price. My stop loss will be price. And then my take profit will be targeting yesterday's, almost at yesterday's high price. My stop loss is at my stop loss will be at 0.69960. Let's call it 0.69960. And my take profit will be at around 0.6 0.6600. So let's give it 0.6600. So I'm placing my TP just before yesterday's high. $0.6600. 0.66200 and stop loss just below this low. So this is a good trade. Now, is it possible for this to go down? Yes, it's very possible. Very, very possible. Can go down. That's why you want to go in with stop loss. So you don't want to trade without a stop loss. Always ensure why you place your trade, because especially for those of us that have small account size, so that your stop loss is in, because it is only with the stop loss you can actually handle. All right, so let me go through the stop loss. All right, so please, if you have any questions, you can drop your questions in the chat. I'll go through them and then answer. So please always ensure that you trade with a stop loss, especially on a day like this. In fact, this week as a whole, always ensure that your stop loss is in place, because we have very massive high impact news slated for this week. Endeavor to use stop loss. All right, so let me take your questions before time is up. A stop loss for AUD USD is just at today's low, which is on my chart is around, that should be that's if this stop loss. The stop loss is mine is at 0.65956. So just somewhere below today's low. All right, so someone is asking if the outcome of the PPI have an effect on the CPI. It doesn't have an effect on the CPI, but it will have an effect on the decision that will be taken afterward. Remember that these two parameters, which is the PPI and the CPI, they are very different readings. That is, the data are coming from different quarters, producers and manufacturers. That's for the PPI, and then the consumers. So the reading of the PPI does not affect the reading of PPI, but these two indicators will influence what the Fed. In fact, they concentrate more on the PPI than on the CPI. It's traders that are much more that the CPI is important to. But for the Fed, who will take a decision or make a decision as to whether interest rates should be or decreased, their focus is usually more on the PPI than the CPI. So it will affect the decisions they will take. But the PPI and the CPI, the PPI do not affect the outcome of the CPI. The market reaction might be affected, the way the market will react, but the way individuals, traders will react to news might make the CPI massive or less. So what I mean is that when the CPI comes out, the movement in the market, the result of the CPI might be affected by the reading that was released on the PPI. That is the market reaction. Yes. But as to the reading, as to the data that will be released, they have no connection. They are not really, doesn't really affect it. Okay, so someone is asking for AUD card. Is have a live today. So someone is also asking, can a sell happen if the news? What you mean is if the news is positive for, if the news is positive and the market go down, in this particular instance, it's unlikely. For the PPI, it's unlikely that if it is positive, the currency will go down. It's unlikely. But there are certain news that if possible can occur, especially those news that are now subject to interpretation. There are some news that when they drop, the values might be positive, but traders, when I mean traders, I mean the big traders, we need to go back and analyze that data to see the effect on the overall economy. Sometimes you might notice that the news is positive and the market is dropping because they have done another interpretation. So it is not just the number they are looking at, they are looking at the overall effect on the economy. But for today's news, it's very unlikely that if it is the news will drop. I mean, the market will very unlikely. So you would not, there are some news that are straightforward. They don't need so much interpretation. Once the data comes out, straightforward. Positive is positive. There's no two ways about it. So if the PPI comes out to be positive, it's straightforward. Take note that the actual of this news is always compared with the forecast. The question you should ask yourself is, who are those that make the forecast? All the analysis you need to do fundamentally, the guys who give the forecast, this forecast is coming from various banks. There are different banks, big traders that have done the analysis and then their consensus. That's why sometimes it's called a consensus. What these various banks have agreed on, what you see as the forecast. So they have considered a lot of factors. They have done a lot of analysis, and then this is the value they are expecting it to be. So if it is more than that value, then definitely it's going to be positive, that particular instrument. They have factored in every other thing. In fact, they have put in they've considered a lot of things. And they are saying that if the number is more than this value, then it's positive. So you should rely on that particular number. Once the news is greater than the forecast and it is positive, it means it is positive. The dollar or that instrument is less than that forecast with the depreciate. There is no other interpretation to it. All right. So I think we've done justice to this. So let me go through again for another question. So someone is asking whether is it advisable to close all existing trade before news? Now, depending on your type of analysis, I personally will not recommend or suggest that you close all your existing. If you have done your analysis, remember that the news that are coming out, these are catalysts to the market movement. So if the market must move, then there has to be news. Now, if you are trading, or let's say you are already in a trade, that's why it's always very important that before you trade, you should consider the high impact news that is slated for that week or for that period. Say, for instance, you place a trade on a Monday. You should have factored in the news today and the news next tomorrow and the news tomorrow. So you factor that into your analysis so that this news is what usually will propel the market. In fact, without this news, the market will rarely move. So we need these events to occur so that the market can move. So if you have done your analysis properly, you should not be afraid of it. But none of you should be afraid of it. You should use the news to your advantage. Use it, make profit from the market. Do your analysis, allow the market push the market, allow the news to push the market your direction. Just like driving and you need a fuel. When you, as a driver, you need petrol in the vehicle. The news is the petrol that we have in the market. That news events, market will not move. Find the ways to take advantage of it. I will not suggest closing all your trading. But if you are not sure of the analysis you have done, or if you have not factored in the fact that there will be news this or today, and you are already in a trade, and you are not really certain, then you can close your trade. But a good practice will always be to factor in the news event into your analysis so that as you place a trade or as you take a trade, it's already considered. You're already putting that into consideration. Another thing you must always do is to ensure that there's a stop loss in place, especially if you have a news event. Now, if you are already in profit and you wish to hold the trade up to the news time, then you should break even. I believe you know how you break even. You move your stop loss above your head already. And if you are in loss and you are not sure of what to expect, then you close your trade. And then there's always other opportunities in the market. More opportunities. All right, so okay, I'm seeing a lot of questions. Let me see if I can take as much. All right, so someone is asking that this morning the news on the bank came out positive. Who is pushing up against what's possible? Okay. The news on the British pound positive, came out positive. Now, take note that if you had listened some days ago, there was a speech by the BOE, and from their speech, they were very dovish. Their speech is they are already factoring in a rate cut. So they are already anticipating that they will cut interest rates. So irrespective of, although they mentioned that they need more data to make decision, but there was a vote. Normally what they do is they vote. So two persons voted for interest rates to be cut. It was one before, so one person has just added. And then the discussions with the other members, they are also tilting towards a rate cut. So what that simply means is that they also mentioned in their speech that irrespective of the data that they receive, that there's tendency for them to cut it. So they are not like the Fed, who has shifted their own rate cuts to almost next year. There's a tendency that the Fed might most likely cut next year or later this year, very late in the year. So with that being said, most of the news events that you will see on the pan may not really change much as to the market's sentiment of what they feel about the pan. So two instruments that are in this particular position is the pan and the card. The news events that are coming in, it has already been factored in that their rate cuts most likely going to occur faster or earlier than other instruments or than other central banks. That is the British pound and the card, Canadian dollar. So the central banks are likely to start the rate cuts earlier than the other central banks. The euro, on the other hand, hasn't given any sign that there's going to be rate cut anytime soon. That's why you see that even when the news on the pound came out this morning, there was no massive movement. It moved and then retraced. They were all positive. The news were positive for the pound, but it didn't really move as anticipated. And that's because, it has already been, all of these have been factored in that irrespective of what happened, there's going to be a rate cut earlier this year, or middle of this year, than other instruments or than other central banks. All right, so break even simply means that you move your stop loss above your entry. That is when you have entered a trade and you are in profit on that trade, you move your stop loss above your entry so that your stop loss no longer becomes a loss protection. It now becomes a profit protection. So anytime you place a trade and then the market has given you some profit, you can move your stop loss from, let's assume you were buying. Assume you were buying. The market now goes up in your favor. you are to move your stop loss from beneath your entry and above your entry to control or to protect your profit. That's what we mean by break. All right, so I want to thank you, ladies and gentlemen, for your time and for your wonderful questions. I really appreciate it. So please do well. For those of us that miss this particular class, you can go to our YouTube page and then watch the recordings. Thank you very much. If you have other questions, you can reach out to account officer, whoever your branches. For those of us that stay within where our branches are located, you can always come in at any time to ask you. Thank you very much, and then see you that time.